Ráwọn yòókù ẹ̀ wọ́n ti kó sínú funfun lẹ́yìn Sùlánì. Àtẹ́ ẹ̀ ní lọ chọ́ọ̀chì tẹ́ ẹ̀ ní ṣèkà. Owó kú mọ́ ilé mú mọ́ tó yẹ káwọ́.
Hello. Hello. Good morning, everybody. Hello, please confirm if you can hear me. Good morning. This is Rally Trade Morning Market Review. I'm Emmanuel Odogu. So we're going to start immediately. Sorry for the time, the little delay we had. We're trying to fix some technical issues. Please confirm if you can hear me. Okay, just go to the chat room and then let me know if you can hear me. Okay, thank you very much. I really appreciate your response this morning. So once again, this is Rally Trade Morning Market Review. So we do this every trading day, Monday through Friday, 1 solid hour of market analysis. So we try to analyze the market for you. Different analysts doing this every day, giving you a preview, a review, just trying to project for you what the market is most likely going to do. And of course, we also take live trade on this platform, okay? So let's get started. I want to believe every one of us, we are here. So if your friends are not here, you can quickly do way to reach out to them so that they can join, okay? So that they can join. We're already running up the year. I want to believe the trading has been very good for you in this particular month, in this month of December. I want to believe you have been trading with great caution. By caution, I mean you have been using your risk mitigate very well, stop losses, and of course your take profit. I want to believe you have been taking profit. No, this season, there will be a lot of spending, okay? So you need to also use your take profit button. All right, guys, I think we can start right now. We have good numbers in the room. Once again, this is Emmanuel Odogu wishing you from Tarkot. I want to believe we all are doing okay. So let's start from our normal fundamental analysis, okay? So what we do here, we always try to look at the news events that we have for the course of the week and even for today. Then, of course, from there, we can now make projection on how it will affect the market, the financial market. Then from there, we'll now dive straight into the charts and start to look at technical analysis side of things. So I'm going to share my screen right now. Since we are all good, I'm going to share my screen. So we are doing this on Zoom. Please, it's also very important for you to also note that. Let's say you miss any of the session, you can just go straight to YouTube and of course, get to watch the recorded version of this. Okay. All right, quickly, let me share my screen with you so that we can look at the fundamental events we have. Please, I've been able to share my screen. Check if you can see my screen. So the website we can use for our fundamentals is you can use tradingeconomics.com, right? Tradingeconomics.com. So you can view some fundamentals here.
Okay, I'll send you.
I think I'm seeing you, Mr. ODJ. If you can hear me, please, you will need to off your video. Thank you very much. Mr. ODJ, please off your video. All right, so you can use tradingeconomics.com. You can equally use investing.com. This is investing.com, right? You can use investing.com. You can also use forexfactory.com. So these are the websites you can use among other numerous websites, okay? Now let's stick with Forex Factory, okay? Very simple, right? For Forex Factory for today, these are the news events we have for today. We don't have a high impact news. For those who are joining us for the first time, this is Rally Academy. So what we'll do is to teach you, is to train you so that you can become armies on your own, okay? And soldiers on your own on the market field. So this first column is the date of the news. This is the time of the news release. This is the currency news will affect. This is the impact. Impact is the volatility. So usually we want to focus more on the high volatility news that have the strength and the momentum to move price from a point A to a distance point B. And that's how we make profits when price is moving. All right, so these yellow colors are the low impact news. Those are joining us for the first time. Then of course, this is medium impact news. So the only medium impact news, medium volatility news we have for today is on the euro, right? So that means we expect some slight, some little kind of movement on the euro. Okay, now for today, we are not seeing any high impact news, but let's check for during the course of the week if you're going to see a high impact news, okay? So if I want to see the news event for the week, I'll just click on this word calendar, this button calendar up here. Then of course, it should be able to show me the news event for the week. So tomorrow we have high impact news. So these red colors are the high impact news, high volatility news. Impact is volatility, please, okay? So if you check down the region, you see that impact means volatility, okay? So this is the high volatility news. So we have AUD monetary policy meeting. We have BOJ press conference. We have CPI. Come on, tomorrow is going to be really hot, right? We have CPI on card. Then of course, we have CPI. In fact, this week we have a lot of CPI, consumer confidence, GDP. So please, you want to stay glued to your this website, okay? And of course, watch out for the actual. So the actual tells you the result of the news, and that result can either affect the currency positively or negatively, okay? Now, please, for today, we're not having high impact news from what we have on this website. So we just go straight into analyzing the charts, straight into technical analysis, okay? Technical analysis. I hope we are good. So those of us still having some trade running, please make sure your trading has both stop loss and take profit. But if you're trading style, because there is no one pattern fits all here, okay? So if your trading style is such that you don't need stop loss, okay, fine and good. But for those of us retail traders trading with small money, you will need to use stop loss to mitigate the risks on your trade, okay? All right, so the next thing I'll do now is switch again to my chart. So allow me to switch again to my chart. So I've been able to switch to my chart. I want to believe you can see my screen. Please indicate if you can see my screen. So you can see my screen. Thank you very much. You guys can see my screen. Yeah, I really appreciate the responses this morning. I can see all of you. You guys are doing great. So you can see my screen. So I am on, this is MT5, right? MetaTrader 5. And of course, this is USD index, right? So I normally like to start my analysis from the index, right? And the index I normally like to use is the USD index. The reason is most of our trade revolves around the dollar, So I would like to start from the dollar, right? Remember, charity begins at home. So I would like to start from the dollar. So whether you're trading commodities, you're trading indices like most of us would like to do, US 100, US 30, G40, all of this commodity has a lot to do with the dollar. So let's start from the dollar. So let's see what's happening to the dollar. The dollar has really been very bearish, very bearish, right? So this is the daily time frame. So pardon me to look at daily time frame, but guess what? I will still have to dive down further to your choice 1 hour time frame. Okay, so let's look at the daily time frame for a brief minute here. So we can see that this has really been very bearish. I can tell you that. So we just saw the most recent break of structure to the downside, right? Even on the daily time frames, of structure, right? Happening just every day on the daily time frame. Okay, so it takes some days or some weeks for you to have a break of structure. It takes some days and even some weeks for you to have a break of structure. So we just saw one. So break of structure is the price has traded below the last low. That's just what it is. So don't let the big grammar confuse you, right? So break of structure indicates momentum in the direction of the break of structure. So that means we are saying there is momentum going downward. That's the meaning of all of this big grammar. There is still momentum going downward. Okay. So as you can see, there was a gap down here. As you can see, there was a gap here. Let me highlight it for you so that you can appreciate it. So there is a gap down here, right? I mean, the closing price is not equal to the opening price of the next candle. That's what we call gap. So there's a gap downward there, and that's a gap down. And gap down is simply pressure to the downside. So apart from the momentum going down, pressure is still going down. Pressure is still going down. Now, this is not to scare you, okay? If you're already buying or if you're already bullish on the dollar, okay? And this actually is for long-term traders, okay? But usually after a break of structure to the downside, we normally expect retracement to the upside, okay? Now, the retracement can happen immediately or it can take some time. But guess what? All of this thing you see happening to the dollar is as a result, is a ripple effect of the rates, the interest rate news, right, of last week, So that is actually what is affecting the dollar, okay? So they actually remain, kept the interest rate at the same level, right? So the Fed are still thinking about maybe cutting down the rates, maybe early next year, right? So, and all of that is going to stay impact on the dollar, okay? So because of we were expecting them to increase the rates further, which means bullish for the dollar, but they did not. They actually kept it constant, okay, at the same level. So that was how we saw this downward movement here. But guess what? We're after a break of structure to the downside, we expect retracement to the upside. Okay, now that will be it for the daily time frame. So let me drop down to H4 time frame so that we can make more sense out of it. So if you notice, there is no clear direction given to you. I mean, direction of trade, right? Given to you on the daily time frame. So the daily time frame is used for perspective view of the market, or if you like your higher time frame. In trading, you would like to use the higher time frame and of course the lower time frame, right? So we call that a top-down analysis. So most people don't ask me, Emmanuel, which time frame is the best time frame? Usually we try to combine all of them. If you go down the time frame, that is like you trying to get more detail, right? Detail about what the market is doing. So actually you can ride across all of the time frame, trying to look at what the market is doing across the time frame. The idea is for you to have an idea, for you to know what the big boys are doing at the higher time frame, so that you can come down to a lower time frame and try to do the same. Okay. Now on this H4 time frame, quickly. Now we are spending enough time in the dollar. That's because after this, it will just be a smooth ride on any other instrument. Okay. So I am seeing a fair value gap here. So and usually the market is usually drawn towards the gap, right? The fair value gap. So it's not like the normal gap. So this one is a magnetic field, kind of a magnetic field that attracts the price. So that means, that means this price may just need to tap or move further to tap the value inside this gap, because there are values, right, left untapped inside this fair value gap. So maybe it may need to move down further on the H4 time frame to tap the value we have there, and of course start moving upward. So let me drop down to H1 time frame and then give you trade direction. Please, you have questions, you are feel free to drop them in the chat room. Okay. So we might just be expecting more bearish movement into this area before the price start moving upward. Now, even if you look at my moving averages, right? So we have just looked at price action, right? So saying the instrument is bearish. Now, even if you look at my moving averages, right? So you can see that the prices are still very much trading below the moving averages. Right? So that's bearish action. That's bearish movement. So there might be a movement into this area. Then, of course, from here to now start pumping and trading to the upside for the required retracement. Remember, after a break of structure we saw on the daily time frame, the market is required to put in a retracement. Retracement is healthy for the price, and retracement helps the price, gives the price more momentum. Why? Because if it retraces, it gives the price a cheaper price or a premium price, depending on whether you're buying or selling. So traders would like to sell at a premium price, a higher price. Traders would like to buy at a discounted price. So for this particular scenario, the price is going downward. A premium price will mean when the price moves upward. So it may just move upward further into this other area before it dumps further. All right then. So we are making progress. So let me give you trade direction, but not on this US index. So from what we have seen here, the dollar is weak, right? The dollar is weak. The dollar is weak. So let me use Euro USD for the first signal for today. So Euro USD, guys, are we ready? Let me know. Now, you say I should explain fair value gap. So I may not be able to do enough justice to that because we have limited time, just 1 hour. This analysis is just 1 hour, okay? So maybe at the end of the whole session, I will drop my number so that you can contact me. I will explain that very well to you. But fair value gap is just a 3 candlestick pattern, okay? So the space between maybe the close and the open of the first and the third candlestick. Now, but then I'll drop my number so that you can reach me. And of course, I can explain further. So that's for you. I can see you there. Oye Kami, thank you very much for that question. Now, let's look at Euro USD. So on the H4 time frame, why H4 time frame? H4 time frame because we want to have an idea what the big money is doing. Remember, I always say the market is divided into 2. So we have big money playing on this same field. Then we have small money trying to pick the scrums that is falling off the table. Yeah, that's very true, right? So for the retail traders, we are actually picking the scrums, right? So when you make 5,000 naira, 10,000 naira, 50,000 naira, they are all scrums falling off the table of the big players. Okay. Now quickly, now we saw this impulsive move here, right? Saw this impulsive move to the upside. Remember, whenever you have an impulsive move, you can take advantage of that move. You can really take advantage of that move. How do you do so? Most persons, once there's an impulsive move, you just go to the top of the move and then place a sell, because they are the controller general of the market. So they have concluded that the market has finished the impulsive move somewhere around here. So to start going down, guess what? Most times they will be disappointed because the market can still push further. Okay, the market can still push further. So the best way you can achieve that, right, is to look behind you. So the left hand side of the chart carries the history, and history is very important on this market. Why? Because technical analysis is simply historical price analysis. So it is you trying to look at what the market has done before and believing it can replicate the same thing going further. Of course, looking at data, the market has always been replicating the same thing going further. So as you can see, after this impulsive move, you can see that it actually stopped where, if you look behind you, I mean, the left-hand side, you see that the market actually stopped here. So you can see that for the fact that the market stopped here the previous time, right? And it's actually stopped here again. So that means the market has printed for us what we call relatively equal highs, right? So that means the kind of momentum selling here was, that momentum was still very much available in the market. So that was what stalled the price from going further up. So then it started falling down. So you might want to take advantage of anytime you see an impulsive move, right? So anytime there's an impulsive move, right? So you just look behind you. I mean, your left-hand side of the chart. That's what I mean by behind you, okay? You look the left-hand side of the chart. So you will just look out for any demand and supply zone. In this case, a supply zone. Please, the best to do this on a higher time frame, H4 time frame and maybe daily time frame. So you can see that it stopped here and of course it stopped here. Then from there we enjoy, or we saw this retracement to the downside. Okay. Now this retracement to the downside does not really mean weakness for Euro USD, because anytime there's an impulse, you expect a retracement, right? So let me drop down to H1 time frame so that I can give you my bias for the day, okay? So that we can move really very fast. Now, breaking today, we saw a gap down, right? Breaking today, we saw a gap down. So this is a gap down. I mean, the price traded, so you can see this gap, right? So that's bearish pressure, right? That's bearish pressure. That's bearish pressure. Okay. So looking behind, I can see a fair value gap, or a very nice entry for me. So I have seen this gap. So this is a 3 candlestick pattern. Okay, let me delete this so that I can explain it very well. So you can see 1 candlestick, 2 candlestick, the 3rd candlestick, right? So this is the low of the candlestick, right? This is the low, and this is the high of this candlestick. So what I do, I'll just draw from this low to this high. So usually, if you check your chart very well, the market is usually attracted to that area, right? So I'll just draw and extend it further. So usually, so this is where the market is being attracted to. So that means I can say this market will still push up further into this area. Then from here, anything can happen inside here. So inside this gap, inside this area, if you see a change of character, then you may want to start doing your sell, right? If you see a change of character, you may want to start doing your sell. Now, but if the price is successfully break through this area, then it may just start going downward. Okay. So inside this area, I would like to do maybe a sell. So I would like to do a sell at this point. So let me give you my precise location. I would like to do the sell, right? So inside this area, if we should see a bearish movement. So an example of a bearish momentum is what we call engulfing candle. I want to believe you know engulfing candle. But if you're hearing engulfing candle for the first time in your trading career, sir, quickly pick a pen and paper and write it down. Engulfing candle, a bearish engulfing. So if we see a bearish engulfing candle here, then we want to start doing a sell inside this area, okay? So I will not just be giving you any price in Euro USD. The reason is it depends on whatever happens inside this area. So the shaded portion is actually, let me give you the price of the shaded portion. the shaded portion is actually 1.09276, right? To 1.09406. I hope we are following. So 1.09276 to 1.09406. So inside the shaded portion, so if you observe your chart very well, you will notice a lot will happen inside the shaded portion, right? So inside this shaded portion, if you see a bearish engulfing candle, then we want to start doing our sell, right? Now, for those who are very aggressive, you don't want to wait for the shaded portion, right? So once the price, so if the price did not actually get to the shaded portion, any movement breaking from this our local support here, then a sell will be envisaged, right? A sell will be envisaged. So let me just give you the price straight away. So if the price trade below 1 point, so let me give you this price. So if the price trade below this area, then I would like to do a sell. So a sell will be envisaged at 1.08848. So you may want to sell if you see the price trade below 1.08848. That's why you want to sell. But that area is not my choice area. My choice area is the price being attracted to this area, this fair value gap here, right? So inside this fair value gap, right? So most time you may see a change of the movement, right? Inside here. So we call that a change of character. So if you have been following up this section in morning, by now you should know what change of character is, okay? So if you don't know, please ask me later. I'll drop my number. So please, we are streaming this also on YouTube, right? So if you miss any of this session, you can get back to YouTube and watch. You know, this knowledge comes by hearing and hearing. So for those of us joining us for the first time, most of these things I'm saying, if they are sounding very strange to you, it means you need to learn or hear these things again and again. So you may want to go straight to YouTube after now, right? Maybe after 9 a.m. this morning, maybe 10, 11. So go straight to YouTube and watch this again and again. So the candle, so the price is pretty for us choppy candle. So we call this candlesticks choppy candle, right? Because they lack momentum, they lack volume, right? So you can see this is choppy, this is choppy, this is choppy. So a 1 whole hour, this is the only volume the price was able to put in. So these are signs that the bears are around the corner. So these are signs that the bears are around the corner, right? And these are signs that the bulls are even, they don't have enough confidence about the market. So these are signs. So whenever you see choppy candle, it simply means the guy that was supposed to use 2 standard lot to trade now is now using 0.5. Right? So that is the reason for choppy candles, right? So it means the bulls are even afraid, right? The bulls are afraid, and the buyers are afraid. Okay, so once the price tap into this area, please, so a break out of this area, it will be a buy, please. But if it comes down to be a sell, please take note. Now let me leave Euro USD. I want to believe you were able to get some value from that. So you're asking the values of my moving average. I'm using 50 period and 21 period, sir. So let me look at GBP USD if you can get the same kind of movement there. So GBP USD quickly. So for GBP USD, I'll do same thing for H4 time frame. H4 time frame. So pretty much we have the same kind of movement here, right? We have the same kind of movement. Now let me shade this particular portion. So all of this shaded portion. So you want to do a little maybe back testing on it. You will discover that usually the price is usually attracted to these areas, right? The price usually attracted to these areas. So if sometimes it can be immediately, then sometimes it can take some time, but the price actually gets to fill this area. So we have some value left on tap inside this area. So usually the price likes to get to fill those areas, right? So again, we saw I think a gap down here and the price moved upwards. So let me jump down to 30 minutes time so that I can give you clear entries here. Yeah, for those of us just joining us, I can see more persons are joining the room. So for those of us joining us, this is our morning market review. So we are trying to analyze the market. Now we are on GBP USD. So we're trying to look at what is happening here. So we saw a gap down, right? So remember, gap can always mean pressure, right? Or movement in a particular direction that you are not opportune to see. So this is the shaded portion I marked earlier. This is the shaded portion I marked earlier. So usually I would like to wait for the price to trade into this area before I can take my decision. So I'll not be in a hurry to take any decision right now. I'll wait for the price to trade into this area. So if the price can break below this area, just like what we did for Euro USD. Remember, GBP USD and Euro USD, they have a very strong correlation. Their correlation is up to 90 to 95% correlated. That means whatever is happening to A is also affecting what is happening to B, right? So strong correlation there on GBP USD and Euro USD. The reason is on the two of them, USD is a denominated currency there. I mean, USD is the second currency. So I would like to see an attraction into this area. Please, I would like to see a movement like this inside this area. Remember, even if it moves inside this area, it will still pretty much be under our moving averages, right? So from here, then I will expect a movement to the downside. So actually, your sell position should be anywhere inside this area. So let me call the price range inside that area. So the price range inside this area is the price range inside this my point of interest. So this area is actually what we call point of interest. So this is the area that interests me the most, right? So 1.27190 to 1.27391. I take it again. So 1.27190 to 1.27391. So inside this area is my point of interest. So I would like to see an attraction, a magnetic field, dragging the price into this area. Then from here, usually what I would like to see inside here, like I said earlier, I would like to see some bearish candlestick pattern, right? So which can be maybe an inverted hammer, you know what I mean? That means rejection of price to the upside. That's what we mean by inverted hammer. Or I would like to see a bearish engulfing. Please, all of these things I'm mentioning, you can still ask me later. I'll drop my number if you're confused about them, or you can ask the instructor you have there, okay, in your state, right? All right then. So that's what I would like to see. Now, please don't forget, we saw a double top here, right? A double top. Don't forget, double tops are also attraction and magnetic field to price, right? So the price may also be attracted to this area, right? The reason is we have a lot of sellers hanging up here, so the price would like to do something or to take them out, right? So if there is a break out of this box, so this box is like a range. So if there's a break out of this box, so the next target will need to take out these two double tops here, okay? Now, I think that's what we have for GBP USD and USD. So we are not giving any clear, this is a buy, this is where you buy, this is a, if so, if you are actually looking for, okay, fine, Emmanuel, where should I buy? Now, please, or where should I say? So a sell would be best for those of us looking for give me fish. Don't teach me how to fish, give me fish. But please, which of them do you prefer? Teach me fish, give me fish. Now, please, my earlier explanation is me teaching how to fish, right? But the giving you fish now is this one. Now, a sell position at 1.27144. So that means if whatever happens inside here and the price start trading downward again, so it may take your sell at 1.27144. So a sell position at 1.27144, and also a buy position traded above this shaded portion, a buy position at 1.2745. Okay, so both stop loss and take profit, you know what to do about it. So the resistance and support are used for stop losses and take profit. Okay, well, actually, I want to see price trade inside this area. I can see gradually it's trying to move and into that area. So I think we are good here. So let's look at other tradable. So we'll look at GBP/USD and of course Euro/USD. So let me look at gold for you. So we are looking at gold right now, guys. Are we ready? So we saw a gap up on gold here, right? We saw a gap up. So just like I always told you, now gaps are usually an attraction to price also, right? So see now after this gap, so what you can do is to just draw this box. So there is a way you can get this rectangle on your phone or even on your laptop, right? So by default, this rectangle may not be there. By default, it may not be there. So you might just need to right click any of the tools here and go to you right click, go to customize, then from customize, you see rectangle. You just add it up, right? So that you can be drawing something like this. So you can see after this gap, right, the market, now this gap means pressure to the upside. So after the gap, the market actually traded more to the upside, right? And even breaking structures more to the upside. But guess what? Since the market have left a value left on tap, so actually it came down, right? It was attracted downward to tap into it. So that was actually what caused this movement to the downside. So that was exactly what attracted the price to the downside like this. Okay. So these are several attractions the price have, right? So I think since it has moved down this much, so the next movement we may want to see before the price will maybe start trading more to the upside, right? But usually on a Monday, the market may like to range on a Monday, of course, break out of that range on Tuesday, Wednesday, Thursday. That's what the market mostly like to do, okay? So if the kind of movement you're expecting to not happen on Monday, check again on Tuesday, Wednesday, then you can see that kind of movement because there is a very high anticipation of traders on the market on a Monday. Okay, I'm just trying to look at the question. I'm trying to look at the chat room here. Please. I've been able to do that. Okay, thank you very much. I'll meet everybody. Thank you very much. I'll meet everybody. All right, so that was what attracted the price. So let me drop to 30 minutes time here so that I can give you entry so that we can move on, okay? Time is always fast spent. Time is always running very fast. Anytime there is value, time is not a friend, man. All right, so let's do this quick. So for gold here, we are seeing also some kind of choppy movement. Okay, let me remove most of these drawings so that it's free up my chart a little bit. Fine. Now, so let me go to a cleaner one. Fine. So for gold here, right, we are seeing some choppy movement also. So gold has printed for us a low, and this low is not just an ordinary low, right? It came as a result of this gap here, okay? So a sell, you should only sell if there is a break out of that low, okay? So you should only sell at 2014.94. So anywhere around 2014.94, that means gold has actually broken below this low. So that's where you can sell. But right now, you don't want to sell, okay? You don't want to sell. You don't want to sell. So we are also looking at a kind of a local support right here, turn resistance, okay? So these are support, turn resistance. These are support, turn resistance, okay? So you may want to do a buy if the price can break above this resistance here, okay? So a buy will be envisaged at a buy will be envisaged at 2030.85. Remember, this is good, very, very, it can be very, very volatile. So 2030.85. 2030.85. Remember, these signals are not for scalpers. For scalpers, you want to drop down further to 5 minutes and 1 minute time frame. Look out for gaps and trade inside the gap. You'll do well like that. Okay. So 2030.85, you want to buy there. Then of course 2014.94. So you have to use pending order for this. Okay. So this will be a buy stop, right? A buy stop 2030.85, then a sell stop at 2014.94. So if you say the gap on your, I'm looking at the comment section. If you say the gap is not visible, I'll drop my number, you screenshot and show me, okay? So you're asking, is it possible to place buy and sell at the same position? Yes, it's possible. Now, it's very possible. You can do it, right? It's just like asking me, is it possible to jump down from a two-story building? Of course, it's possible. But should you do it? Now, the answer is no, to jump down from a two-story building, okay? Now, the same way, it's possible to place a buy and, of course, a sell, right? Now, but if you do that, it means if the market is going upward, the buy will be giving you profits, the sell will be giving you negative, right, of the same amount if you're using the same lot size. That's like locking up the trade. You lock it up. So that means you will not be making profits. You will neither be making losses, okay? Except you have a strategy around it. That if the buy gives you profit, gets to a resistance, I'll close the buy in profit and expect the market, the negative, to reduce when the price starts dropping from the resistance. Maybe that might just be your own strategy. So you're asking no TP for today. Of course, there is TP. Now, for the buy stops, you always look at the left-hand side, right? Always look at the left-hand side for what we call local support and resistance. So they are what you can use as your TP, okay? Local support and resistance. So you can see there is a drop here. So the price move up, turn for me and start going down. So if you're buying here, your take profit will be at 2038.70. There's another level of take profit here, right? There's another level of take profit here. That would be at 2044. So 2044.80, right? So this is take profit 1, 2038, and this take profit 2, 2044. So just look at the left-hand side of your chart, right, for support and resistance. Now let me look at which other instrument should I look at. So you may just want to call one instrument before I jump into our US 30, D40, US 100. So just suggest any instrument you want us to treat. So if there is none, then let's jump into, okay, USJPY. Okay, two different persons are talking about USJPY. Wow, what a good coincidence. It looks like something is happening to USJPY. So let's explore USJPY here. So let's see what the United States dollar has to say about the Japanese yen. Okay. So USJPY, you can see that let's look at H4 time frame, guys. H4 time frame. So the market has really been dropping, right? So you can imagine that USJPY is putting out this kind of massive movement to the downside. You can just imagine that. That's a sign of the dollar is very weak. Usually the JPY used to be very weak compared to other major currencies, right? But right now you can see that the table has turned. The table has turned, right? So let me quickly share my screen and look at this other website called Finviz. So those of us joining us for the first time, this Finviz website, you can use it as your currency meter, okay? As your currency meter. So you just type www on your browser. I believe you can see my screen. Just type www.financialvisual.com, shortened as Finviz. So it opens up something like this for you. It opens up something like this for you. So you have to click on Forex. So once you click on Forex, it opens up again for you. Then by the top left, you'll see the word performance. Click on performance. Then you get to see what the currency meter has to say, right? So this is 1 day relative strength. 1 day. That is just for today, right? And the day is just beginning. The day has not matured. So we are seeing the JPY as being the weakest. That's for now, okay? Now, but if you want to see what has been happening, you click on 1 week. So 1 week also. So this is activity for 1 week, right? So the instrument towards my left are the strong ones. The ones towards my right are the weak ones, right? So you can see dollar is weak, CAD is weak, JPY is weak. What is the strongest right now? NZD, AUD, Euro, right? GBP. So let me go back again so that we can use this information and do justice to our analysis, okay? So this is very, very bearish for the dollar here. So let me drop down to 30 minutes time frame. So 30 minutes will have a lot to say for the intraday trader, okay? So, but from what we saw there, we saw that the dollar has more strength, right, than the yen. That is for this morning, right? The dollar has more strength than the yen for this morning. But what can we deduce from this chart? Look at what we can deduce. We can see clearly from this chart that the market has been trading sideways for the intraday trader, right? So this is what we may want to call sideways movement for the intraday trader. And that's what we popularly call the ranging market, right? So the market has been in some kind of range. So clearly now it's making more sense, right? Okay. So clearly, as you can see, it's making a little bit more sense, right? That a break out of this range would mean a buy or a sell, right? Now I've been able to see another gap here. So the price may just be attracted. So if there's a break out of the range, the price will be attracted to this area. So a buy position for USDJPY, you requested for it, this is it. So a buy, then they say just a break out of this range, right? A break out of this range. So that would be, place your buy, that will be a buy stop at 142.628. So with your take profit target at this area, right? Inside this area. So your take profit would be at anywhere inside the year, please, 143.414. So I'm doing a buy stop here, right? So if you do a buy stop here, your stop loss, your stop loss would be maybe below this 50 period moving average, right? Or below this support here. So your stop loss can be here or here, depending on your risk tolerance, okay? So what is your tolerance? That one will be topic for another day. So your stop loss can be 141.897, right? 141.897. Or you can use this other stop loss that is far. 141.306, right? Because the reason is it is still inside our range. It has not broken out of our range, okay? So all of these areas and prices inside the range are vulnerable to the price. And you don't want to keep your stop loss in a place that is vulnerable to price. You hide the stop loss and you expose the take profit, okay? So, sir, once there is a break out of this range, they want to buy. Now, what if there is a break below the range? Of course, it will be a sell. So you are waiting for the price to give you a leg, right? To show you what it wants to do. That's the reason for waiting for a breakout. The price should tell me what it wants to do. So you sell at 141.108, right? You sell at 141, that will be a sell stop. So you set your sell stop at 141.108. So please, let's leave currencies and let's do a little bit of indices. Let's start from US 30. We don't have time. Time is no longer our friend. So let's start from US 30. Okay, I'm already seeing D30 here. D30, D40, 10 more companies added to D30. So we call it D40 now. So look at D30. So let's look at this analysis on D30. So D30 has been giving us this instrument has been giving us an all-time high. Man, this is an all-time high. So you can see for the first time in recent time, or even in history, D30 has touched 70,000 euros. Come on now. This instrument deserves a hand of applause. Do you know, as a rule of thumb, you should buy more than you sell. Rule of thumb, you don't want to take it to the bank. You should buy more than you sell in the index because these are companies, right? These are companies, right? 5 years ago, this instrument was trading around 11,000 euros. 5 years ago, right? Around 2017, 2018, this instrument was trading around 11,000, 7,000, 8,000. Some of us saw this instrument trading around 7,000, 8,000, 9,000. But guess what? From 5 years down the line till now, it has touched 17,000. So which means for these 5 years, the trend has been an upward trend. An upward trend. So because these are companies, right? So companies want to do very well for their investors. So they want to make more profit. They will put everything in place. Now, that being said, on this daily time frame, since it has touched an all-time high, we're already seeing an inverted hammer down there, or up there, right? At a verified resistance. You don't need a soothsayer to tell you this is a verified resistance. So once the price have achieved a significant fit, right? So usually that's turned to be a resistance, right? So it's like a bubble that can burst at any time. It's just like the first time Google touched $1 trillion market cap. That was a bubble. It burst the first time Facebook touched $1 trillion market cap. That was a bubble. It burst. Facebook is trading below market cap now below 1 trillion. But that's touched. It touched. It touched. So this is like the first time. You see, it has touched, right? So we already seen a bearish pattern here, right? All right, so let me drop down to H4 time frame. That being said, so we are seeing a bearish engulfing here. We're seeing a bearish engulfing here, as you can see. So these instruments are in quotes. It is for those that have big, relatively big capital, right? It's not for those that have 30,000 naira, 50,000 naira. So you may want to add more money to your account. Do a top up. What is the money doing in the bank? It's doing nothing. The banks are trading with your money. So you can trade by yourself with your money with good risk management, right? You always use stop loss. So from this H4 time frame, right? Even though the market has given us a bearish engulfing, this is a bearish engulfing here, okay? The market has given us a bearish engulfing, but you can see with my moving average, so all of this area will want to serve as a what we call a dynamic support for price, right? Dynamic support for price. So I would like to drop down to a much lower time so that I can take advantage of that drop, right? So a much lower time frame, this is it, right? So this is where I would like to take advantage of the drop. So if you watch carefully, so now this instrument will only drop if the dollar becomes, if the dollar gains strength, okay? So this is a very small local support, right? That the price has broke, right? Local support. So if we are to sell, we have seen a place where we can use as our stop loss, rather, as our stop loss. So just above this area can be used as a stop loss, right? So a sell position will be envisaged here. Why? Because let me zoom in so that you can see very, very well. So this candlestick has pierced through this local support, but it is not enough to conclude that it has broken the support. The reason is this candlestick zero, or this candlestick that is forming right now, may just trade again into this area. Then it will now mean that this candlestick, this one, right, that broke it, is just what we want to call a fake out, right? A fake breakout, breakout. So it is ideal and advisable to see what this candlestick will hold, right? So that means, so that will now lead us to two types of entry: aggressive entry and a conservative entry. So that will not be a conservative entry, okay? So so let's do an aggressive entry. So an aggressive entry, I'll enter a sell for an aggressive entry. Then of course I'll put my stop loss here. Then of course, then the conservative entry will mean you wait until this candlestick closes as a bearish candlestick. So I'm teaching you two types of entry: aggressive and conservative, okay? So two types of entry: aggressive and what? Conservative. So my take profit is at this low. It's at this low, okay? So take note, this instrument has been changed from D30 to D40. So take note, okay? Because 10 more instruments has been added, okay? So let me move over to US 100. So I'll just do US 100, then we can now wrap it up, okay? So that US 100 will also cover for US 30, right? So US 100 very fast. So let me drop down to a lower time frame, 30 minutes time frame. Let's look at what's happening here. So from what we can see here, we can see a kind of very strong movement to the upside, right? I think this instrument has really touched an all-time high too, right? That's 16,000, getting close to 17,000. Can you imagine that? So, but we saw a resistance that the price has printed for us, okay? So let me give you entries here. It's already past 9. Let me give you entries here quickly. Then I'll drop my number. Please don't forget, you need to take my number in just in case you have further questions, right? It's important. So I would like to do a sell if the price can break below this local support here. So I'm not selling immediately. I'll wait. If the price can break below this level, then I'll sell. So my sell position would be at 16815.97. 16815.97. So 16815.97. So 16815.97. Then of course, my take profit would be at this area here. I think that there's a value gap here. So please sell stop at 16815.97. Then take profit at 16785.84. So let me take it again. Sell stop at 16815.97. Then take profit at 16785.84. Okay, so the stop loss would be with your risk tolerance. So how much risk you can tolerate, that's what we call stop loss. So then the buy stop would be, you don't just buy immediately, because we have seen a bearish. So these two candlesticks is all bearish engulfing, right? So that means it is more to the bearish side. So until this bearish candlestick is overcome, so if the price can move above it, then we cannot think of it trading to the upside. Okay. Now the entries would be at 16859 for a buy stop. So you want to set it on your system. 16859.69, 16859 for a buy stop. Then take profit would be at this all-time high, this high. So 16878.49, 16878. Now, usually, whenever the market prints a high like this, it normally leaves it with a double high, with a double top. Now, it has already done that. Okay, that's even fine. So it has gotten to this high before, it has printed it again. So it may still want to tap it if the momentum is there. So guys, this is where we draw the curtains already past 9. Thank you very much, guys. I hope you got some value. Let me drop. So you can't place a trade on D30. Okay, that's fine. Say it is disabled. Okay, please contact your account officer on that. It could be the reason why it has been moved to D40. So check your market watch for D40. Now let me drop my number for all of you: 09026264507. So Emmanuel Odogu is my name. Guys, thank you very much. Please do wait to join us again tomorrow, same time, 8 a.m. in the morning, for another exciting morning market review. If you miss any of these, please go straight to YouTube and just search for Rally Trade on YouTube. Then you get to watch all of our recorded version. Guys, thank you very much. I've dropped my number. Okay, you didn't see the number. So let me drop the number again. Sorry about that. So this is my number, please. I can see your question, Femi. That's the reason why I'm dropping my number. Okay, I don't have time again. So or you can contact your account officer on that your question. Contact your account officer. But I've dropped my number. You can also reach me, please. So 09026264507. Guys, that's my number. Emmanuel Odogu, signing out for now. Guys, please do wait to join us tomorrow again for another session.